We want to continue this talk here of the drop that we're seeing in the markets. For that, we want to bring in Ben Slavin. He's a global head of ETFs at BNY Mellon. And Ben, just the selling pressure that we're seeing today, the Dow's still off over 300 points, although as Jared was pointing out, we are well off the lows of the day that we established within the first hour or so of trading. But what do you make of the selling pressure that we're seeing today and the fact that investors seem to be spooked by the spread of the Delta variant?
Well, certainly we're seeing markets in the red today, but we've started to see early signs of this in the ETF market. And certainly one of those signs was really about inflation fears really starting to recede, partly because of the Delta variant, partly because of some of the recent Fed comments. And we've seen a rotation really out of short-term fixed income ETFs into investors repositioning into the longer end of the curve. And I think that's something that we're going to look to see continue, especially in these market conditions. We've also seen an impact on the commodities. We're a large player in commodity ETFs, and we've seen impact across our book with respect to money coming out of commodities, even though there's been a divergence in price, vis-a-vis oil, been cracking $70 a barrel, and also, gold, also seeing some pressure due to those the positioning around inflation. And so both of those have really impacted ETFs, and we've seen some early signs of that here in the last week or so.
Ben, good to have you here. A lot of us are just old-fashioned investors and may be stuck inside an old-fashioned mutual fund, whereas we don't have the speed and liquidity we would have with an ETF. Describe for those of us who've never been through the experience, what happens if our mutual fund should somehow convert into an actively managed ETF? What does that really look like? Do we notice it at our end?
Yes, in many ways you will. And this is really the hottest topic in the industry right now. The industry saw a milestone earlier this year with the first ever conversion of a mutual fund to an ETF. More recently, we saw a very large conversion by Dimensional Fund Advisors take another step and convert some of their ETFs. But as a shareholder, really, it's about demand. The market is demanding the ETF structure, and that is really becoming more and more the preferred way to consume investment content. And ultimately, if you're a shareholder in a mutual fund and your company or the firm that you're with is looking to convert, you really have a few options. One is to ultimately, you could sell your shares, you could transfer to a mutual fund that is not converting, or you could transition from a mutual fund to an ETF, but you would need a brokerage account to be able to have that change occur. But in many ways, there are benefits, right? Lower cost, liquidity, transparency, all of the benefits that you see alongside, some of the tax efficiency we also see with ETFs are benefits that shareholders sees, and we expect this trend to continue.
And when you take a look at the flows into ETFs, certainly right around a record here as we start the second half of the year. When you see this uncertainty in the market, obviously investors are easily spooked by some of the headlines that we're seeing. How do you see that affecting ETF flows over the next 6 months?
Well, ETFs had a record first half of the year. They've been on fire. And we certainly expect that trend to continue. So just to put it in perspective, we saw about $470 billion in flow in the first half of this year, just shy of $500 billion, but still not too shabby. And that's about a $4 billion per day pace. And it almost eclipsed the record we set last year in the first half of the year for total ETF flows. So it's really been phenomenal. But certainly the story of flow this half, or the first half of the year, has been in the equity space, which was not necessarily the case in 2020. And we've seen that pace accelerate. So the flow rate is up about 55% from May to June. And again, we'll see what happens here with markets. Certainly we're in the red today, but we'll see what happens going through the end of the year. But we are seeing a lot of investors start to reposition their portfolios here after quarter end.
When you talk about repositioning the portfolios, regarding the ETFs, do we have a breakdown? Do you have a breakdown you can share with us? Are we seeing retirees or people planning for retirement using the ETFs? Or are we seeing more of the retail investors who've become very active in markets? Are they the ones who are using ETFs perhaps to protect their place in line as they make decisions?
Well, ultimately, when we're talking about almost $500 billion, in the first half of the year, I think the answer really is yes to all of those. Certainly, we've seen an increase in adoption by retail investors. It was certainly the story of 2020 in many respects. We've seen that trend continue. So it's not just meme stocks, it's also ETFs that these investors are using. Certainly on the retirement side, that has really been, in many ways, the Alamo, if you will, of the mutual fund industry, where ETFs have yet to increase their penetration or really crack that segment of the market. But those cracks are starting to form, and some of those walls are breaking down where brokerage options and other technology is in play that would help better facilitate investors using ETFs inside their retirement accounts.
Ben Slavin, global head of ETFs at BNY Mellon, thanks so much.